So let me ask you something. You've probably had this moment, maybe more than once, where you're sitting at your desk, doing your job, being reasonably good at it, and somewhere in the back of your mind there's this quiet, nagging thought. This can't be it. There has to be something more I'm supposed to be doing with my time here. And it's not that you hate your job. Maybe you actually like parts of it, but you've started to notice something. Some people, not necessarily the smartest people, not always the hardest workers, seem to be moving differently. They're building something, getting promoted faster, getting recruited, getting offered opportunities that seem to come out of nowhere, and you're sitting there thinking, what do they know that I don't? Here's what nobody tells you early enough in your career. Your job is not just a paycheck. It's actually one of the most underutilized financial and professional assets you will ever have access to in your life. And most people, most genuinely talented, capable people, spend years, sometimes entire careers, treating it like it's only a paycheck. They show up, do good work, collect their salary, and go home. And there's nothing wrong with that, technically, but they're leaving so much on the table. So much. My name is Emmy, and I spend way too much time thinking about money, careers, and why certain people seem to quietly accumulate wealth, influence, and opportunity, while others with equal talent stay stuck at roughly the same level for decade after decade. It's genuinely one of the things that keeps me up at night, not in a stressful way, more like a puzzle I can't stop turning over in my head. And what I want to talk about today is something I've started calling the shadow portfolio. It's not a financial product. You can't buy it anywhere. Your HR department has never mentioned it. But it might honestly be the most important thing you build during your working years. And the people who figure it out, even accidentally, tend to end up in a completely different financial and professional universe than the people who don't. By the end of this, I think you're going to look at your job, whatever you do, wherever you work, completely differently. And that shift in perspective, it could be worth more than any raise you've ever gotten. What is a shadow portfolio, really? Okay, so let me paint a picture. Imagine two people. They work at the same company, similar roles, similar salaries. Call them Jordan and Alex. They both show up, they both do their work, they're both considered solid employees. But Jordan treats the job like a transaction. Come in, complete the tasks, go home. And Jordan is perfectly fine with that. The paycheck arrives, the bills get paid, life moves forward. Alex does something different. Alex starts treating the job like a laboratory. Every project is a chance to learn something. Every relationship is an investment. Every skill gap is a problem to solve, not because the boss demanded it, but because Alex understands something about how professional capital actually compounds over time. 5 years later, Jordan is still in a roughly similar position, making maybe a little more money. Alex has been promoted twice, has been headhunted by 2 other companies, has a network of people who would genuinely go out of their way to help, and is building something, not just earning something. The shadow portfolio is everything Alex was building that never showed up on a pay stub. It's the invisible accumulation of skills, relationships, reputation, and leverage that sits alongside your official job title and salary, and ultimately determines how far you go and how much you earn, sometimes for the rest of your career. And here's the thing, nobody talks about it this way. Career advice tends to be very tactical. Update your resume, negotiate your salary, learn this software. All useful, but it misses the bigger picture, which is that your working years are, among other things, a wealth-building window that most people don't even realize is open. The first asset is skills as currency. Okay, let me start with skills, because I think this is where people get it most wrong. Most people think about skills in terms of job requirements. Do I have what this role needs? Can I check these boxes on a job description? And that's a reasonable way to think about it when you're job hunting, but it's a terrible way to think about it when you're actually employed and have access to something most people don't think to use, which is a paid environment to acquire expensive knowledge. Think about what your company is actually exposing you to. Industry trends, real business problems, how decisions get made at scale, how money flows through an organization, how clients behave, how vendors negotiate. If you're paying attention, you're basically enrolled in a graduate-level program in whatever your industry is, and you're getting paid to attend. The people who build shadow portfolios are almost always the people who treat this education seriously. They're not just doing their tasks, they're understanding why the tasks exist, what business problem they solve, what would happen if they weren't done. They're asking questions that go one layer deeper than their job description requires. I remember reading about a woman who worked as an executive assistant for years, and honestly, on paper, it's not a role that screams wealth-building opportunity, but she was intensely curious. She watched how her executives made decisions, she learned how budgets worked, she picked up the language of the business, the metrics they cared about, the pressures they were under, the relationships that actually moved things. She was building a skill set that was, in a way, more complete than most people at far higher levels because she had visibility into everything. Eventually, she moved into operations, then strategy, then started consulting. The skills she'd absorbed, that she'd chosen to absorb rather than just doing the minimum, became the foundation of a completely different financial life. Now, you might be thinking, okay, but how does learning more at work translate to actually getting rich? And that's a fair question. Here's the honest answer. Skills create options, and options are what give you leverage. When you have skills that are genuinely valuable, not just technically but strategically, you can negotiate from a position of strength. You can say yes to better opportunities. You can walk away from bad ones. The person with no options has to accept whatever they're given. The person with a robust, well-developed shadow portfolio of skills almost always has options, and options, financially speaking, are worth a lot. Okay, now here's the one that makes some people uncomfortable. Relationships at work, networking, whatever you want to call it. I know, a lot of people, especially introverts or people who just find the transactional nature of networking kind of gross, have a really complicated relationship with this concept. And honestly, I get it. There's something that feels a little hollow about schmoozing at a company event or connecting with someone on LinkedIn purely because they might be useful to you someday. But here's the reframe I want to offer you. The most valuable professional relationships aren't built through networking. They're built through genuinely doing good work alongside people and letting those connections develop naturally. And that's something your job gives you access to every single day. Think about it. The colleagues you collaborate with, the managers who've watched you solve a hard problem, the clients or customers you've helped, the vendors you've built a rapport with. Every single one of those is a potential thread in a web that can, over time, either hold you in place or catapult you forward. Here's something that's genuinely underappreciated. Most major career opportunities, the really good ones, the life-changing ones, don't come from job boards. They come from someone thinking of you when an opportunity appears because you've built the kind of relationship where they would. It's not about being the most charismatic person in the room, it's about being someone who people have genuinely positive associations with, someone who helped them once, or made their work easier, or treated them with respect when they didn't have to. There's research, and I think this tracks intuitively, suggesting that your network has a larger impact on your lifetime earnings than your formal education does, which is kind of wild when you think about how much we stress about degrees and certifications and not nearly enough about the quality of our professional relationships.
The practical version of this is pretty simple. Pay attention to the people around you. Not in a strategic, calculating way, just in a human way. Help when you can, show up reliably, be someone who makes other people's jobs a little easier. Take genuine interest in what your colleagues are working on. Over time, this compounds into a web of goodwill and warm relationships that becomes one of the most valuable things you own, even though it never shows up in your bank account directly. The third asset, reputation as compound interest. Speaking of compound interest, let's talk about reputation, because this is maybe the most quietly powerful force in any career.
Reputation is weird because it builds slowly and then moves fast. For years, you might feel like you're just doing your thing, showing up, doing good work, being decent to people. And it might not feel like anything is happening, but reputation is accumulating the whole time. And then, at a certain point, it starts doing things for you that you didn't even ask it to do. People recommend you for things. They defend you in rooms you're not in. They think of you first when something good becomes available. They trust your judgment before you've even explained your reasoning. This is what reputation actually is. It's trust stored up over time that pays out in opportunities and goodwill when you need it most. The flip side is also true, and I think it's worth saying plainly. A damaged reputation compounds too, slowly, then suddenly. You can be excellent for years and have one pattern of behavior, one persistent reputation for being difficult or unreliable or taking credit that isn't yours, and it will quietly close doors that you never even knew were open to you. I've seen this play out so many times. Genuinely smart, talented people who couldn't understand why they kept getting passed over, while someone who seemed less impressive kept advancing. And often, when you looked closer, there was a reputation gap. One person was known as someone who could be trusted, who lifted others up, who delivered consistently. The other was technically skilled, but had a reputation for something, drama, defensiveness, inconsistency, that made decision-makers nervous. Talent alone doesn't make people want to take a chance on you. Reputation does. The actionable thing here is almost embarrassingly simple. Be the person you'd want to work with, consistently. Not perfectly, nobody's perfect, and occasional mistakes don't define a reputation, but consistently, over time. That's it. That's the whole strategy. The fourth asset, leverage, the one nobody talks about. All right, let me get into something that I think is genuinely underrated and that most career advice completely ignores. Leverage. When people talk about leverage in a financial context, they're usually talking about debt, using borrowed money to amplify returns. But professional leverage works similarly. It's anything that multiplies your output or your value without a proportional increase in your effort. So what does leverage look like in a work context? A few things. First, it's institutional knowledge. The longer you've been somewhere, the more you understand about how things actually work. Not how the org chart says they work, not how the handbook describes them, but how decisions actually get made, where the real power sits, what the unwritten rules are. This knowledge is genuinely valuable, and it takes time to accumulate. The person who understands the landscape has an enormous advantage over the person who's just arrived, even if the newcomer has better technical skills. Second, leverage is visibility. If you've built a reputation and relationships in the right places, if the right people know who you are and what you're capable of, you have leverage in negotiations that someone invisible simply doesn't have. Your market value is partly determined by what you can actually do, and partly by how many people know you can do it. Third, and this is the one that's most interesting to me, leverage is process and systems thinking. The people who learn to create leverage at work, who figure out how to systematize things, delegate effectively, identify the 20% of effort that produces 80% of the results, those people become disproportionately valuable over time, because organizations desperately need people who can think at that level, and there aren't that many of them. The practical implication here is worth sitting with. Every time you solve a problem at work, ask yourself, did I solve it in a way that creates leverage, or did I just patch it? Did I document a process that others can use? Did I build something that scales? Did I find the root cause, or just the symptom? The person who does the first thing in each of those pairs is building something. The person who does the second is just treading water. The fifth asset, financial education hiding in plain sight. Now I want to talk about something that people almost never mention, which is the financial education that's embedded in almost every professional job, if you're paying attention. Here's what I mean. If you work in marketing, you are surrounded by information about customer behavior, pricing psychology, and what makes people spend money. If you work in operations, you're learning about efficiency, supply chains, and margin. If you work in finance, obviously, but even adjacent to finance, in sales, in strategy, in any senior support role, you're getting a crash course in how businesses actually make and lose money. This is genuinely valuable financial education, not in the abstract, textbook sense, but in the real, concrete, this is how the world works sense. And most people absorb it passively, if at all, rather than actively translating it into knowledge they can use. The people who do translate it tend to make better financial decisions in their own lives. They understand how to read a basic income statement. They understand what it means for a business to have strong or weak unit economics. They understand leverage, risk, and margin. And this understanding tends to make them better investors, better negotiators, and often better entrepreneurs, if they ever choose to go that route. One of the most interesting things I've noticed is that people who've spent time in sales, really good sales, often end up being excellent personal finance people, not because selling and saving are obviously related, but because sales teaches you something profound about value, negotiation, and understanding what something is actually worth versus what someone says it's worth. That's a skill that transfers directly to negotiating your salary, your rent, your contracts, your everything. So the invitation here is to be intentional about absorbing the financial education that's already happening around you at work. Don't just process your role, understand the business. Ask questions that go beyond your immediate responsibilities. Read the company's public financials if you can. Understand what drives revenue in your industry. You're sitting inside a case study that most business school students would kill to access to. I want to shift gears a little here, because I think there's a framing issue that holds a lot of people back. Most people treat their job like a destination. You get the job, you settle in, you become comfortable, and then you're there. Done. And the goal becomes to stay comfortable, maybe get a raise every year or two, and coast until something forces a change. The shadow portfolio mindset treats your job as a launchpad, not in a flighty, always looking for the next thing way. That's its own problem. But in the sense that everything you're building, skills, relationships, reputation, leverage, knowledge, is building towards something. Maybe that's a different role. Maybe it's a business. Maybe it's a consulting practice. Maybe it's just a dramatically higher level of financial and professional security within your field. Whatever it is, you're moving toward it, not just sitting still. This shift is important because it changes how you make decisions at work. Instead of asking, what's the least amount of effort I can put in to stay comfortable, you start asking, what's the highest leverage thing I can do here to build what I'm building? Those are completely different questions, and they lead to completely different outcomes. There's also something to be said here about side projects and adjacent income streams. Your primary job, done well, can be a phenomenal launchpad for these. The skills you build, the credibility you accumulate, the connections you make, all of it can feed into something you're building on the side. Freelance work in your area of expertise, consulting based on your industry knowledge, content creation around what you know, starting something small in an adjacent space. I'm not saying everyone should be a side hustler. That's exhausting, and honestly, some people are very happy just building deep expertise in one lane and being compensated extremely well for it. That's a completely valid and often very lucrative path. But the launchpad mentality, the idea that your job is working for you as much as you're working for it, changes everything about how you show up. The seventh asset, the money conversation nobody wants to have. Okay, I have to talk about salary negotiation because it's impossible to talk about getting rich at work without talking about this. And I know it's uncomfortable, I know. Most people would rather do almost anything else than have a direct conversation about money with their employer. There's something about it that feels awkward and vulnerable, and a little bit like asking for something you might not deserve. But here's the hard truth. Your employer is not going to spontaneously pay you what you're worth. That's not how this works. Salaries are, at their core, a negotiation, and if you're not negotiating, you're unilaterally accepting whatever the other side decides, which is almost never in your best interest. The research on this is pretty stark. The gap between what people who negotiate their salary earn and what people who don't earn is significant, and it compounds dramatically over a career, because every raise, every new offer, every bonus is typically calculated as a percentage of your current salary. If you accepted a lower starting number 10 years ago and never pushed back, you've potentially been leaving tens of thousands of dollars a year on the table for a decade. The lifetime cost of not negotiating is genuinely staggering. But, and this is where the shadow portfolio connects directly, negotiating well is much easier when you've built one, when you have documented skills, a strong reputation, clear evidence of value created, and ideally outside options, or at least the credibility of someone who could have outside options. You are negotiating from strength. The person with a rich shadow portfolio doesn't have to beg for a raise. They can make a case, and the case almost makes itself. The practical advice here is pretty specific. Know your market value. Actually research it, not just a gut feeling, but real data from salary databases, conversations with peers in similar roles, recruiter conversations. Build the case for your value in terms the organization cares about: revenue generated, costs saved, problem solved, people developed. And then have the conversation directly, not apologetically, not aggressively, just clearly and confidently, because you've done the work to know what you're worth. The eighth asset, knowing when to move and when to stay. Here's one last thing I want to touch on, because I think it's genuinely one of the most consequential decisions working people face, and one of the most misunderstood. When do you stay and when do you leave? The conventional wisdom has shifted back and forth on this. For a while, people used to stay at companies for decades and build loyalty. Then we went through a phase where everyone said, job hop every 2 years. That's how you maximize salary. And the truth is, as usual, more nuanced than either extreme. Staying too long in the wrong environment is genuinely dangerous for a shadow portfolio. If you're in a place that doesn't value growth, doesn't reward excellence, has a culture that punishes curiosity or initiative, staying there is not just stagnating, it's actively eroding the things you've built. Bad environments have a way of killing the habits and mindsets that build strong portfolios. You start to match the energy around you, and if that energy is mediocre or cynical, that's what you absorb. On the other hand, leaving too soon, before you've extracted the real value from a role, is also a mistake that people don't talk about enough. It takes time to build genuine expertise, to develop real relationships, to accumulate the kind of institutional knowledge that creates leverage. If you're always moving before you've built something solid, you're constantly starting from zero. The relationships are shallow, the reputation is thin, the skills are surface level. The rough heuristic I've come to is something like, are you still growing here? Not just in the there's always something to learn theoretical sense, but meaningfully. Are you building things that will compound? Are the relationships deepening? Is your reputation expanding? Is your skill set genuinely developing? If yes, stay and keep building. If you've genuinely hit a ceiling, not a temporary frustration, but a structural limit on what you can build here, then it might be time to move, and to move intentionally, carrying your shadow portfolio with you. Bringing it all together. So let me pull this together because I want to make sure you're walking away from this with something real. The shadow portfolio, the skills, relationships, reputation, leverage, financial knowledge, and strategic positioning you build throughout your working years is, I genuinely believe, one of the most important wealth-building tools available to most people. More accessible than starting a business, more impactful than most investment strategies for the early and middle parts of a career, and almost completely ignored by mainstream financial advice, which tends to focus on what you do with the money after it's already in your bank account. But the shadow portfolio is about the upstream of that. It's about making yourself someone who earns more, gets offered more, has more options, and creates more value. Not through hustle culture, grind yourself to dust energy, but through intentionality, through paying attention, through treating your professional life as an investment in itself. Jordan and Alex, from the beginning of this, they both put in roughly similar hours. They both showed up. The difference was that Alex understood, at some level, that work was more than a transaction. It was a building site, and over time, what Alex built became something that paid dividends long after any individual job or project was done. You have access to that same building site. Right now, wherever you are in your career, early, mid, late, starting over, the raw materials are there. The question is just whether you're going to pick them up. I don't want to make this sound like some big, dramatic, life-altering revelation, because honestly, most of the things that move the needle aren't dramatic. They're small, consistent. They're being a little more curious than the job requires, being a little more generous with your colleagues than strictly necessary, being a little more intentional about what you're learning and why, being willing to have the uncomfortable conversation about your salary, being choosy to understand the business around you rather than just your corner of it. Small things done consistently over time. That's what a shadow portfolio is made of. And here's the thing I want to leave you with. Wealth, real, lasting, life-changing wealth, almost never looks like a sudden, dramatic event. It looks like a series of small, good decisions that compound over years into something that surprises even the person who built it. The shadow portfolio is how you make those small, good decisions inside the working hours you're already spending anyway. You're already at work. You might as well be building something while you're there. If this way of thinking about careers and wealth resonates with you, I'd love for you to share it with someone who might need to hear it. And if you've built something like a shadow portfolio, intentionally or accidentally, I'd genuinely love to hear about it in the comments. See you in the next one.